Did you know sellers have to pay closing costs too? Well, if you didn't, even if you did know that they had to pay closing costs, you should still watch the rest of this video because I'm about to tell you how much and what they have to pay for. So, we're about to get started right now. My name is Kasie Gray. I am a licensed realtor with W Real Estate in Ukiah and Sonoma Counties. I specialize in residential and results. That means I get you results and I sell your house, and I love to sell your house. And I love listings, and this series is for sellers, about sellers, and will help you learn the ins and outs of selling your home. And this episode, number 3, if I can figure that out, I guess that's 6. Number 3 is about closing costs. So closing costs are mostly paid by the buyer. The buyer has to pay escrow and title fees, transfer tax, and for inspections, and a few other things. But a seller still has to pay some closing costs. But a seller still does have to pay, a seller does have to pay some closing costs. So some of those closing costs are mainly the agent's commission. So you as a seller negotiate the commission with your agent. So say, for example, 6%. So that agent is going to make 3% and probably most likely going to split it with the other agent, with giving the other agent, the buyer's agent, the person who brings the buyer to buy your house, 3%. Sometimes, no, I'm not even going to talk about that. So you pay 6% total, not 6% and 3%. I know it's kind of confusing, and the way that the paperwork says it, it's really confusing. So 6% total, and so that's 6% of the selling price. So if you're listing it for X amount and it sells for X amount plus, so if it sells for X amount, then that's what you're paying the agent out of. So that is what you're going to pay. You're going to pay the agent 6% of whatever it sells for at the end of the transaction. As a seller, you also have to pay a processing fee, sometimes an underwriting fee for your new loan, an underwriting fee for your previous loan. There might be some fees that you have to pay with your previous loan, and there are some fees that you have to pay for the tax search and notary if needed. There are a lot of fees that are... If you have any questions about how much of a closing cost fee you're going to have to pay, I have a handy little dandy app on my phone, and it will include everything, especially prorated taxes. So prorated taxes are a fee either you have to pay or the buyer has to pay. So taxes are... So as a homeowner, you probably are aware that property taxes need to be paid on February 1st and November 1st. So say you're in, let's see, what day is it? It is November 18th. Say we just listed your house and we're going to sell it in 30 days. So in 30 days, you will be living at that house for 48 days since you last paid taxes. So you already paid taxes for that quarter. When someone buys your house, they are going to be living in the house for the remaining part of that half. So they are going to pay you money that you already spent, and you're going to get that back. But say you are selling your house in... is that right? Say you're paying this. Say you're selling your house before you pay your property taxes, then they're going to prorate that amount and since the buyer is going to have to pay the taxes when the tax bill comes, you are going to have to pay for the part that you lived in, so that could possibly be an added fee, but it's probably a lot less than you actually paying your taxes. So, I mean, it all works out. So like I said in the beginning, closing costs are mostly paid for by the buyer. There are ways that that can be negotiated. So a common thing that happens is a buyer is a first-time home buyer, or they are buying a house but they have a lot of cash but they want to save it for the renovations. A way that you can alleviate the closing cost fees that are added as a buyer, which are a lot more than as a seller, is, so say someone is buying a house for $350,000, their closing costs are $10,000, and they don't have the cash for it right up front. They can offer the seller $360,000, have them pay closing costs, and then that buyer will have some more money to pay their mortgage each month, or update the kitchen, or whatever need be, or to just have some more safety net. Or to just have a safety net. So the way that this works is then the buyer is going to be paying that $10,000 on top of their loan, and it's going to be negotiated in. So that is a great way to make things work for everyone, including the buyer and the seller. Sometimes people will offer purchase price but ask to include closing costs, and that is up to the seller if they would like to do that. Obviously, if the seller doesn't want to do that, they don't have to, but it never hurts to ask. So that is the rundown on closing costs. If you would like a estimated sheet on what your closing costs would be as a seller, I would happily send you that. If you have any questions about how much your house is worth, there's a link down in the description that will let you know how much your house is worth. And I hope you please stay tuned for the rest of this home selling series, where you'll learn the ins and outs of selling your house and some more very useful information, just like this video was very useful, I'm very sure. So please follow me on Instagram and like my Facebook page, and I will see you in the next video.